Hey traders, and welcome to your Forex Market Preview. What we will do in this video is we will go through 28 different currency pairs to try to identify some high probability trade setups for the week ahead. But before we get into the video, please make sure that you have subscribed to the channel and you have also hit that bell so that you stay up to date with all of my videos as and when I release them. And you're going to want to do that because I am going to be releasing many of these sort of trade idea videos. So if you're interested in high probability trade setups and things like that, you're going to want to get a notification when I release them because some of them will be time critical. Also, before we get over to the charts, please remember that I'm not authorized or regulated to give investment advice. So everything that I talk about in these videos here, they're my own opinions. It's what I believe is going to happen in the market, and it's the way that I'm going to trade my account. You still need to go away and do your own analysis and your own due diligence to decide whether or not the trades that I'm talking about, whether they make sense for you. Okay, but hopefully you'll enjoy it, and hopefully it will give you some ideas and some things to think about going into the trading week ahead. And of course, if you have any questions about any of the trade setups or opportunities that I talk about in this video, please make sure that you post it in the comments beneath the video here, and I'll do my best to answer them or answer all of your questions as quickly as humanly possible. Now, with that being said, let's waste no more time and let's jump over to the charts to look at what we do have for the week ahead. Okay, so let's start off by looking at the Aussie CAD. Now, the Aussie CAD, we are actually quite neutral with this pair here. Both the Australian dollar and the Canadian dollar have a lot going for them, so it's not really a case of picking a strong against a weak currency pair. This is very much a strong against a strong currency. So what we're looking at here from a technical perspective really is this level at the 0.9705. This level right here, we believe is going to be a pivotal level, especially considering we're neutral. So really, if the market stays beneath this level, then we believe that there's going to be some moves to the downside. And what that means is that we don't want the market to break up above this level. We want it to hold through there throughout the Asian session, and then start to break down, Monday morning, Monday afternoon, going into Tuesday, to start to break down from there. But crucially, it needs to stay below this level for us to say that we're going to maintain a bearish bias here. If the market breaks above this level, so above the 0.9700, and it holds above that level, then we're going to start looking for long opportunities. So we'll be trading, intraday breaks of highs and things like that to get into the market to be able to take a position to the upside. But very much neutral, so we're going to keep our eyes on this level here to decide which way it is that we want to trade it. Looking at the Aussie franc, so the Aussie franc, we're very bullish. Again, we said that the Australian dollar is a currency that we believe has some very strong fundamentals behind it. So if you look at its manufacturing and non-manufacturing PMIs, they're both strong at the moment. Inflation's a little bit neutral. Employment is strong in Australia, GDP as well. The central bank is pretty much neutral, but the market positioning is positive for us here. So the Australian dollar, across the board, obviously we just spoke about the Aussie CAD. The CAD's got a lot going for it as well. But if we put the Australian dollar against most of the other currency pairs, it's going to come out on top. And that's exactly what we've got here with the Aussie franc. Now, the only issue of the Aussie franc is that we are coming up to a big resistance level. So we do want to be long the Aussie franc, but we don't want to trade into this level here at the 0.7269. So what we'll do is either wait for the market to break up above there and hold above that level, or if it doesn't do that and it starts to pull back a little bit, then we need to look at the next sort of support and resistance levels for some price action to indicate a bit of a reversal. And the next level is going to be the 0.7022. So this level over here, which is this previous support level. So we'll wait for the market to come down to there and see how it reacts and see if we can get a bounce from that level. If it breaks through that level, then again, we'll be looking for a bounce down at the 0.6919. The Australian dollar has gone quite a long way in a relatively short period of time. So we wouldn't be surprised if we see the Australian dollar pull back against all of the pairs, but essentially we're maintaining a very bullish bias here, and that's the way that we're going to play this. The Aussie yen, again, like we said, is very bullish. I mean, you can see that even without looking at the fundamentals. If you look at the technicals here, the market is trending very, very heavily to the upside. This is the daily chart here. So it's above the 100 period moving average. It dropped below the 10, but it's just broken back up above. Again, we have some trouble on the horizon, or we've got some potential roadblocks rather. I wouldn't call it trouble. And that's the 84.34 level, and above that the 85.72. So if we get above there, then we can look to trade towards 8572. But as we get to 8572, we then need to look to see how the market reacts there as to whether you want to take profit there or not. If the market drops down, then really the next stopping point, so if it drops from here without giving us an opportunity to get in, then the stopping point will be somewhere around the 80.86. So that's where we wait for the market to give us print some sort of a reversal pattern at this level here, in which case we'll then be able to look to take a trade to the upside. We don't want to be short this. We do believe that any selling pressure, which we may indeed get selling pressure here, but we think it will be short-lived, some profit taking, and then the Australian dollar bulls will get back involved in the markets and buy from here. The Aussie Kiwi, so this one, excuse me, so this one is, historically quite a range-bound peg, so they're so close to each other. But nonetheless, we still do have a bullish bias here with the Australian dollar against the New Zealand dollar. It's not massively bullish, but it is bullish. We do believe that, if someone puts a gun to your head and says, pick a direction, we think that the direction here is going to be to the upside. The next stopping point from where it is right now, so we'll be quite happy to buy through highs here, looking to see how the market fares up until the resistance level up here at around the 1.1039 level. If the market were to drop from here, we don't think it would drop all that far. You can see that this is quite a range-bound pair in any case, but essentially we would need to have our eyes in and around this zone here at the 1.0826. And if it gets below that, then perhaps this previous level over here, so this previous level of resistance there at the 1.0724 would look like a good place to add a couple of Aussie Kiwi longs in there. The Aussie dollar, so the Australian dollar against the US dollar is, we are bullish here. This one's got a little bit of a different dynamic to it. So obviously you can see that the market is definitely bullish. The market has been trading quite nicely to the upside. We think that's going to continue as well. But with this particular pair, we believe that the US dollar also has, some positivity in it. And we're also bullish on the US dollar. So this one here, even though we do believe that we're going to see further moves to the upside, one, because, if things are going well in the US, then things are going to go well around the rest of the world. You've also got the Australian fundamentals going for it. And then you have that play again, where if the US is doing well, then you'll have more risk on type trades, which will further provide a catalyst for the Australian dollar to rally from here. Excuse me. So around the 0.7563 level. Of course, it could break below there, but again, we're looking to be a buyer in this pair or in the Australian dollar across the board. So if it does break down below here, down towards the 0.7418, could be another area to look to add to longs. And if it gets down below there, then the next stopping point you're going to be looking at is 0.71 or 7200, so 200 or so points below there if it gets to below there. And if the market gets all the way down there, then maybe we might need to reconsider the fundamentals and the overall direction and the bias that we have with this pair. The CAD franc, we are bullish. Again, the Canadian dollar it's got very strong fundamentals going for it. So our long-term position and direction in terms of the Canadian dollar is definitely to the upside. The Swiss franc, not so much. So, the Swiss franc isn't massively negative. It's just not, overly positive. So from this pair right here, we're looking to either buy through the highs here up towards the 0.7638 level. If the market drops back, then we've got two levels. One's going to be the 0.7363. The next level is the 0.7256 that we'll have our eyes on to add to our long positions there. Going into the CAD yen, so this one is going to be very, very bullish. And this, we not only have the fact that we're bullish the Canadian dollar, but we are quite bearish in terms of the Japanese yen. And you can see that, obviously we're talking from a fundamental perspective, but you can see that this is obviously manifested itself onto the technical charts as well, in the way that the market from January of this year has literally been up, 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 with maybe just a few short days here and there, but essentially the market is moving to the upside. The one problem that we have with this is it has gone a very long way in a very short space of time. So it is due a bit of a pullback. Where that pullback will be, obviously you don't know. We think that if the market were to get all the way down to 84.68, then that would be a massive opportunity to become a buyer. I don't think that the market will get down there, but if it does, then we'd be looking for buying opportunities. Equally, if the market kind of moves sideways along here and provides us some sort of like a trend line opportunity, so trend line break to the upside, then we could look to buy this with a view to hitting the 89.18 level. The Swiss yen it's a little bit range bound, so we don't really have anything that we want to do with this pair right here. Obviously, the lower end is the 115.45. The upper end is 118.81. You can see that there's not a lot of movement in here. So even if we're looking to take advantage of the intraday volatility, it's not moving all that much. So from that perspective, we believe that there are better opportunities out there, and we're going to leave this one for the moment. If we look at the Euro Aussie, so the Euro Aussie here, we are definitely bearish. The Australian dollar we are bullish on. The euro we're kind of neutral to a little bit bearish if you pushed us to it. Again, you can see that this is shown on the charts. We are currently trading at a very, very big level. So this support level back here on the 31st of May, 5th of June. So in 2018, so a couple of years ago now, we can see that provided a big support level. Then again at the end of 2018, so going into December, support again. And when the market dropped down to that level on the 23rd, 24th, 25th of February this year, it then bounced from it again. Now, we believe that the markets will go lower, so we'll see more Australian dollar strength, but obviously we're waiting for the market to break through the 1.5260 level in order to confirm that trade. So we don't want to sell into this level because the market could well bounce from here, and why sell into a level? If it does bounce, then we'll just find an opportunity to sell further up. So perhaps somewhere around the 1.6014, we'd look to add a sell trade in there. But we'll keep an eye on that and see how things go. The Euro CAD, so the Euro CAD here we can see we are bearish on. We've got the market has sold off massively through a previous structure level. So it broke structure over here. Okay, that was structure printed on the 21st of Jan. It was then broken a month later on the 23rd of Feb. We'll get rid of that now. The market obviously is looking like it's weighted quite significantly to the downside. We've got a big, if I zoom out a little bit, we've got a big previous level of resistance, which could act as support. So we're not going to take a trade into that level. If we get below that level, so if the market breaks below that level, and gives us an opportunity to get in on a technical break, then we will sell below that level. Obviously, we'll have our eyes on the 1.4446 as a next potential stopping point. And if the market were to bounce from here and bounce up towards 1.5071 or in and around that region, then we would look to add a short position when the market got up there. So that's what we're looking at from the Euro CAD's perspective. The Euro franc is bullish, so we're bullish on this pair. I don't think that we want to buy up into this region here at the 1.1163. We'd rather wait for the market to pull back somewhat, either to the 1.0900 level, so in and around this area here, or at least give us a bit of sideways price action similar to what we have going on over here. So some sideways price action to give us a level that we could trade a breakthrough. But where it is right now, we either need to see the pullback or we need to see some price action in order to allow us to get involved in that trade. Moving to the euro pound. So the euro pound, we are bearish, okay? And this one, again, you can see on the charts here that the market, our bearish view based on the fundamentals is also illustrated by the technicals. So the technicals are very much to the downside. We're below the 10 period moving average. We're below the 100 period moving average. We've broken structure over here at the 0 spot 8858 level. And essentially we're looking at either the 0 spot 8686, so this area here, or the 0 spot 8858 level is areas where we would look to add sells if we get the price action set up there. And then when we do take the trades, we're going to ultimately have our eyes on the 0 spot 8293 as an area to take profit, which is, the longer term low, which was printed basically, a year and a bit ago on the 7th of February 2020. Looking into the euro yen, so this one we're essentially neutral on the euro yen here. If you pushed us, we would say that we were slightly bullish, but really and truly we expect some upside price action, but wouldn't be surprised by the market dropping down either. So from that perspective, we would say that, cautiously buy dips in the euro yen. If it breaks to the 127 spot 12, you could look to add a position in there. If it drops any lower, so maybe perhaps towards the 124 spot 47, you could add a short position in there. But just bear in mind that by the time the market gets down to that level, that might completely change the picture here. So, we're not bullish or bearish on this one. We're quite neutral. So from that perspective, there are other opportunities out there. You might decide that this might be one that you just kind of want to stay away from. There's no real benefit of being involved in it. Well, obviously there's benefit if you pick the right direction, but we don't necessarily think that it's a high probability trade there. The Euro New Zealand is very, very similar. So we're completely neutral here. The only thing that I would say with this is that we've got some nice price action going on here. The market sold off quite a bit. It then rallied quite a lot. We've got the 1 spot 7165. So if the market gets up towards that level, I think that you might be able to get some short-term profits from a bounce of that level to the downside. So again, we are neutral on this, but we do believe that selling highs is the way to go here, rather than perhaps looking to buy the dips, because the fundamentals are neutral. The technical picture is a little bit more bearish, so we'll keep an eye on that. The euro dollar, we are very bearish about here. So as we said, the US have got some really positive things coming out there. The euro, not so much. The euro's got a whole host of issues that it's dealing with over here, not to mention obviously the vaccine rollout and things like that. So from that perspective, even though it's not showing up on the charts here yet, we are definitely very bearish here. So we are looking to add to short positions in the euro dollar. We've already got some short positions on here, which we took on a break of this level over here. So you can't really see it here. But essentially around the 1 spot 1882, got in on a short there last week. So we're maintaining that, and essentially we just look to add more positions if we get a bit of a pullback, or once we get down to the 1 spot 1620 level, then we'll look to take some profits. If the market starts to climb, then we've got a number of areas where we would look to become sellers from. One is the 1 spot 2050, and then 300 pips above that, the 1 spot 2351. That's ultimately the higher price resistance from the recent price action here. So as long as nothing on the fundamentals has changed, that's definitely another place that we would be looking to sell. If we look at the pound pairs, so the British pound, we are slightly bullish on the British pound across the board. It's got a little bit going for it. Obviously, here in the UK, we're benefiting from the vaccine rollout going really, really well, which is a good thing. The markets are obviously with us on this as well. So the markets are bullish for the pound. There's one the services PMI isn't quite as strong as it should be. Manufacturing is okay. Inflation and employment is about neutral. But as I said, the market positioning is obviously bullish from the pound's perspective. The pound Aussie, we're neutral for this particular pair, but that's because the Australian dollar is obviously very strong. So, the pound has a lot going for it, just not against this particular pair right here. So from that perspective, we wouldn't do anything with the pound Aussie at the moment. The pound CAD is the same thing. So the Canadian dollar is very strong. Perhaps you would want to buy the lows and sell the highs. So play a bit of a range in here, but essentially, it is a bit neutral. So if the market moves sideways, we wouldn't be surprised by that. Where you would want to be trading the pound is against things like the pound franc and the pound yen, which you can see here. So with the pound franc, we've got a resistance level at 1.3321, which you want to keep your eye on. But if the market were to bounce, if it were to break down from here towards the 1.2540 level, that's where you would look to add a long position. If it were to get below there towards the 1.2241, you could add a long position on there. We would equally be quite happy to buy through the highs here at the 1.2991 with a view to trading up towards 1.3316. Now, the pound yen is showing a very similar sort of story here. So again, that's because the franc and the yen were sort of franc we're neutral on, yen a little bit bearish, but because we're bullish on the pound, you can see that that's what's transpiring on the charts here. The markets are moving up. So with this particular pair, it's bouncing off of a previous level of resistance, which is now acting as support, which we can see here. We don't think that we'll get a breakdown, but if we do get a breakdown from that level, then you would want to look to add long positions in at around the 145.14 level. If we don't get the breakdown from here, then you would want to look to buy intraday highs up towards the 154.22 level or above there towards the 156.62 area would be another place that you would want to sort of reevaluate. If we look at the pound New Zealand, so we are bullish on this pair right here. Looking at the price action, it's a little bit untidy, granted. We don't want to buy below the 1.9780. If the market can break up above that level, we will add a long position in there. If it breaks down from here, we will look to add a long position. When it gets down towards this previous level of resistance, which could then be support at the 1.9424. If we look at the pound dollar, so this one we're kind of neutral on. And again, that's a function of the fact that we're bullish both the pound and the US dollar. So there isn't much to pick between at this particular moment in time. Does that mean that we won't get momentum? No, absolutely not. So we could get a nice bounce from here up towards the 1.4319 level. So up here, we could get a nice bounce there. Equally, the market could break down. And if it breaks down towards 1.3355, well, again, we would look to put a long position on here. So, we're sort of neutral on this pair, but we aren't willing to sell in this area. We'll be willing to buy in this area. When it gets to the top, you look to take profits and perhaps become a seller up there. New Zealand CAD, we're very bearish on. So if I just zoom out here for a second, you can see that the market technically has broken down. So the moving averages have crossed over. The price is comfortably below the 100 period moving average. It's now sitting at a previous level of resistance here, which we thought could act as support. And now it's going to be what's going to happen at this area here. So if the market can hold below this level and we get a break below this low at the 1.8732, then we will be looking for a short. If the market bounces up towards this resistance area up here, well, then we would also look to add a short when it gets up to that level. But at the moment, we won't take anything until the price action over here plays itself out. And when we do take the position, then we need to look at the 0.8324 level as a potential stopping area, so where you might want to take a little bit of profit in there. Moving on to the Kiwi franc, so the New Zealand franc, we are bullish on. We're looking to be buyers from the 0.6327. So if the market were to drop down to this level here, which is, if I zoom out, you can see a previous level of support over here. Support, which then became resistance over there. In fact, let's move it down just a little bit so that you can see that it actually acts as support over here, resistance over here. If the market were to get down to that level, you would certainly have to look at adding at least some tactical longs from that position there. Equally, if the market starts to break up from this level, then we can look to the market to trade up towards the 0.6933. New Zealand yen surprisingly is the same as the New Zealand franc. They both trade quite similarly to each other. So here we're looking at the 7.3 spot, 7.3 or 7.4 area to add long positions in there. And then if we do get into a long position, we've got a few resistance levels. So 7.930, 8.180 and 8.413 would all be areas, as you can see here, that would be areas of interest because they have provided resistance in the past. So it is an area where the market might take a temporary pause. Doesn't mean that the direction will change. It just means that we can take some profit off the table at that moment, wait for the market to drop off a bit, and then add at cheaper prices. The New Zealand dollar we are bearish on. So this market here has been selling off. It's recently broken beneath its structure level over here at the 0.7, well, let's call it 7100. So it's broken through that structure level there. If it can hold below that level, we'd look to see the market trade towards 0.6793. If it breaks up from here, we would look to become sellers at the 0.7094 or even above there, the 0.7483. And in fact, if the market decided to start turning around at the 0.7277, well, that would be okay as well, because that's the previous area where we got a lot of supply in the market and the market sold off from that level. The trouble areas, we'd be looking at 0.6798 and 0.6426 as areas where we would potentially look to take profits or at least unload some of our positions. The dollar CAD here, we're pretty much neutral on this pair. If you were to take positions, you would be selling the dips down towards 1.2260 and 1.2049. The same goes for the dollar franc. So this one here, we are neutral on this one, but again, you know, the areas that you need to look out for, the 0.9178, 0.9445, and 0.9667. But what you have to remember is that, you know, when you're trading the currency markets, you have the benefit of over 28 pairs to trade. So you don't need to pay attention to these ones where you don't necessarily have much of a directional bias there. You can wait for ones like this, which is the dollar yen. And the dollar yen we are massively bullish on. We can see the price action is supporting this. We're currently trading at a level of resistance at the 109.79. So we need to see how the market does with this area here. If it breaks through this area, then we can look to trade it up towards 111.77. If it doesn't break up above that level and it breaks down, well, then we can look to become buyers from around the 107.95 level. Okay, so that about wraps it up for this week's Forex Market Preview. There was a lot of information in there. I hope it all made sense to you. Or if you've got any questions, then please feel free to ask them. Of course, as always, we're willing to answer your questions. Also, remember that we're not telling you to take any of these trades here. You still have to do your own due diligence as your own analysis. You know, we're not authorized or regulated to give out investment advice. So what we're doing here is we're giving you our analysis. We're telling you what we're looking to do with the markets. And you still need to go ahead and make your own decisions as to what you're going to do with your trading account. Okay, so our ideas, but you're the person responsible for your execution. Okay, so that being said, again, I hope you enjoyed it, and I will look forward to speaking to you in next week's Forex Market Preview. Take care now.